Quick question. Are you looking for the easiest way to invest your money into stock market where you are almost always going to get a positive return? Yes? Hey buddies, welcome back. Today we are going to talk about something really exciting, something that's going to change the way you think about investing. If you have been investing for a while, you must have heard the name John C. Bogle. Hailed as the father of index investing and as the founder of the Vanguard Group, he has some great wisdom to share that will help you to become a savvy investor. If you are interested, just grab a cup of coffee and let's get started. Number 1. Invest you must. Picture this. You work hard, set aside your saving, but what if your money isn't earning you enough? That's the biggest risk for investors. It's not short-term ups and downs, but the risk of not accumulating enough wealth. The solution? Just turn your hard-earned money into fulfillment investments. John Bogle's first investment advice is clear. Invest you must. Number 2. Time is your friend. Now, let's talk about the magic of time. Imagine you start investing in your early 20s and look for a retirement at the age of 65. With such a long time frame, even with a modest return, you can witness an incredible power of compounding returns. If you have been investing in the index fund, you'll be getting around 10% per annum. And that means you'll be doubling your money in just 7.2 years. Having your time as your friend, your money can grow to a staggering amount over the years. The earlier you start, the better. Number 3. Impulse is your enemy. We all know that emotions can lead to impulsive decisions, especially when it comes to investing. But here's the catch. Emotions and investments don't mix well. John Bogle advises us to eliminate our emotions for our investment programs. That's the key of staying on the track and not getting swayed by the Wall Street noise. Stay focused and don't let your emotions get the better of you. Number 4. Basic maths can do wonders. Investing don't always need complicated maths. Sometimes we just need to dive into the basics. Your net return on investment is the gross return of your investment portfolio minus the costs you incur. High fees can compound your cost of investment, which can have a painful impact on the miracles of compounding returns. So the best way to maximize your gains is simply keep your investment expenses low. Number 5. Stick to simplicity. Investment doesn't need to be complicated. John Bogle believes in a straightforward approach, a sensible allocation among stocks, bonds, and cash reserves. Diversify your investment, strike a balance in your risk, your return, and the cost. Just stick to the simple stuff because it's always the most effective. Number 6. Never forget reversion to the mean. John Bogle reminds us that what goes up must come down. A strong performance is like to reverse to the market norm or even below it. When you see something that's seemingly high-performing funds, just be extra cautious and understand the possible risk. Number 7. Stay the course. In trouble times, staying the course is your best strategy. No matter what happens to the market, stick to your investment plan. Timing the market is dangerous, and changing your strategy at the wrong time can lead to very bad investment returns. Just stay committed to your investment journey and avoid making any hasty decisions. Number 8. Understand the stock market is volatile. Market drops are a reality and they can be scary. But remember, they are part of a stock market's nature. And if you are investing in the stock market, be prepared for an occasional 20% drop. That's why it's crucial to invest your money you will need for at least 5 years. Number 9. Focus on the long-term investing. Trying to beat the market can be challenging. Especially with high fees and active management fees, this will be very hard. John Bogle's advice: own the stock market through index fund and enjoy the ride. Simply adopt a long-term perspective and let the market work its magic. Number 10. Pay attention to dividend returns and companies' performance. As an investor, focus on dividend returns and the progress of the companies you invest in instead of obsessing over daily market fluctuations. Keep an eye on the fundamentals and the companies you are part owner of. Number 11. Avoid chasing past performance. I know it's tempting to jump into investment that have an outstanding year, hoping for a repeat performance. But as John warned us, Past performance is not a reliable indicator of future results. Focusing on what company can achieve in the future rather than dwelling in their past glory is a better way. Look beyond the hype and always make wise decisions according to the company's fundamentals. Number 12. Lower costs for higher returns. You may not be realizing it, but lower costs can significantly impact your investment returns. Comparing two funds with different expense ratio, one with lower fees will leave you more money for your pocket, and the other with high fees will eat into your investment returns. In investing, every dollar and penny counts. Aim to save on fees, as these simple steps can actually boost your overall returns significantly. Number 13. Manage expense and emotions. There are two enemies when you are investing, and they are your expense and your emotions. High expense eat into your gains, and emotions lead to impulsive decisions. Focus on reducing your costs and remember Warren Buffett's wise word about being fearful when others are greedy and being greedy when others are fearful. If you want to find success in investing, be ready to conquer both your expense and your emotions on your investment journey. Number 14. Embrace simplicity. Investing doesn't have to be complicated or overwhelming. You do not need to be a financial expert to succeed. Just keep it simple. Consider index fund and allow yourself to invest in the entire market in just a simple click. Make investing simple and not complicated. Embrace simplicity and let your money grow with ease. Number 15. The winning formula for investing. Own the entire stock market through index fund and stay focused, stay on the course of your investment. With this approach, you can achieve your financial goals without unnecessary risk. This is the most timeless advice by John Bogle. And that's it for the 15 powerful pieces of advice for successful investing from John Bogle. We have explored the best investment advice, and it's clear that his wisdom can lead you to financial success. Remember to invest for the long term, keep your emotions at bay, and stick to simplicity. So, are you ready to grow your income? See you on our next video.